Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me, Sharad Dubey. In the next 1 hour, we'll take you through all the top buzzers in trade, either on the back of news flow or on the back of technicals. First up, let's take a stock of how the market is shaping up at this juncture. Sharad, good recovery coming in Nifty Bank. In fact, we are almost 220 odd points from the day's lows on the Nifty bank, but Nifty, however, is still trading in the red. It is also trying very hard to recover, but we are still below the 24,650 levels.
Exactly, you're right, Ankita. There's a lot of volatility in the markets coming, and Ankita, the RBI MPC meet was there. Very important. The rates have been unchanged and the stance is neutral, but largely there was a knee-jerk reaction coming in, but Nifty attempting a proper recovery, and still it's below the 24,650 levels mark, but a recovery has been there. Slowly the digestion is happening of global cues as well as domestic cues. Also for Nifty Bank itself, look at it, there has been a good recovery coming in that portion as well, and now it's in the green. Of course, RBI governor's important press release was also there, where he had stated that India's growth still remains constant and liquidity is also there in the markets. Also the inflation portion, that has also actually come down for FY26. Nifty mid cap, Nifty small cap, after the knee reaction of RBI MPC meet, are trying to stage a recovery as well, but not that as successful. IT pharma space are seeing certain areas of sell-off as well. But moving ahead, let's move on to the show, and we are having Rabinder from the research team as well joining us, and apart from this, we are also having from Motilal Oswal, Nagraj Shetty, who is the technical and the derivatives research analyst at HDFC Securities. Good afternoon, Nagraj. How the markets looking like? Two major events are factored in. Still volatility is there and market is in a range bound. So now what happens?
Hi, good afternoon, Sharad. The rightly said market has been in a range bound action. But if you look at the market breadth, the breadth remains negative. A lot of the stocks are showing in a weak trend. Overall chart pattern is still not out of the woods. Lower tops and bottoms on the daily chart is indicating weak bias for the market, and placed at the strong support around 24,500 levels. The upside bounces is not gaining momentum. So I think there is a higher possibility of Nifty sliding below from here onwards, and it could retest around 24,500, 24,400 as well in the next few sessions.
All right. So those are the levels to watch out for. But let's get started then with all the stocks that are in focus and why they are buzzing. First up, there's Excite that is in focus. Now, the company has reported its Q1 numbers. The company has reported a 24% year-on-year increase in the consolidated net profit, which stands at 275 crores. We also, these net profits were supported by higher revenues and improved operating efficiency. Now, this compares with the profit of 221 crores in the corresponding quarter last year. Now, the consolidated revenue from operations during the quarter rose 5.9% on a year-on-year basis to 4,694 crores, up from an earlier 4,436 crores in Q1 of FY25. Now, on a standard basis, the company reported a notable improvement in EBITDA margins as well, which rose 12.2% during the quarter. Now, this was primarily aided by improved price realization, a favorable product mix, and gains from the cost optimization across manufacturing facilities. Nuvama has come out with a note on Excite, and they're maintaining a target price of 380 rupees versus the 370 rupees. They've hiked the target price. They feel that the EBITDA is in line, and the lithium project is on track, and they're building their core revenue EBITDA CAGR of a stable 7 and 9% respectively over FY25 and 28 estimate. On the back of that, Nuvama has given it a hold rating. Motilal Oswal has also come out with a note, and they're maintaining a neutral stance, and they've given a target price of 379 rupees on Excite. But Excite is mirroring the market right now, is trading with cuts of almost 0.5%, reeling under selling pressure.
Well, numbers were good. Brokerages have also given a thumbs up, but of course the market impact is already there. Nagraj, SAIL, what's your view on this stock? Of course, the overall pricing that has actually picked up on a fundamental basis for the steel segment over the last 4 odd months. But SAIL, metal space as a whole, getting a bit attractive also because of dollar cracking. What's your view on SAIL? What are the charts suggesting?
Yeah. Yes, Sharad, the metal stock actually has showed some significant upmoves over the last few months, and the SAIL in fact recently showed some high volatility. The way it has reacted down from 134, 135 levels is indicating there is a formation of some important top reversal pattern at the low levels. currently placed at the 200-day EMA, showing some signs of upside bounces, but the upside bounces are not sustaining at the higher levels. I'm expecting further weakness in the sale, and the next lower supports to be watched is around somewhere around 113, 113 to 114 levels.
Well, let's look at the defense space. The defense space has been buzzing. Yesterday, post-market hours, the Defense Acquisition Council of India actually approved defense projects worth 67,000 crore rupees, and because of that, most of the defense stocks are buzzing positively in the trade. Look at it; these are mostly domestic-facing companies as well, with also rising exports. Bharat Electronics, the stock has been maintaining its momentum. Stock is up almost more than 1%, and Bharat Dynamics also is trading in the green as well. Interestingly, more geopolitical tensions rise, there will be more benefits coming in for the players in the defense segment.
Absolutely, Sharath. The defense counters are in focus on the back of geopolitical tensions and the big news of investments coming in. But let's move on to the next counter from the FMCG pack, Britannia, that's come out with its Q1 numbers. Rabinder, doesn't look very good for Britannia. Take us through the fine print of the earnings.
Well, Britannia reported a weak set of Q1 number, and company's revenue was up by more than 8% year-on-year basis. And if we talk about EBITDA, then EBITDA was flat at 757 crore as compared to 754 crore. And if we talk about EBITDA margin, then company's EBITDA margin saw a decline of more than 130 basis point year-on-year basis at 16.4% as compared to 17.7%. And company says that the overall market share remained flattish, and company has highlighted commodity inflation in flour, refined palm oil, cocoa and sugar. And the management in the con call said that they have completed the price hike cycle, and margins will only be better if the commodity price remain in a band. And the management also highlighted that the East region has seen some internal restructuring and lost share in the East India, and the Tiger will be relaunched and come back stronger. And Macquarie has come out with a note and they have maintained the underperform rating with target price rupees 4,850. So back of weak Q1 earning and a little bit of cautious management commentary, stock is in focus and the stock is down over 4%.
Well, yes, Britannia is taking a beating when it comes to the overall stock reactions. But moving on from one FMCG company to the other FMCG company, HUL is in focus. Nagaraj, what are the technical charts suggesting for HUL?
Yeah, technically looking very strong. Recently, we have seen some tremendous up move from the lower levels from 2400 to almost 2700, 2750 levels. And after that, showed some volatility from the higher levels. Sell-off was seen. And currently holding at the higher levels, the overall chart pattern is still looking positive. Even RSI and volume patterns are also indicating some positive bias for the stock price. I'm expecting further upside in HUL from here onwards, and the next resistance to be watched is around 2700.
Alright, so those are the levels to watch out for as far as HUL is concerned. But let's move on to the next counter, and that is Adani Ports. Now remember, Adani Port had reported its numbers yesterday, and now we have brokerage notes that have come out on Adani. One is Motilal Oswal, that is maintaining a buy call on Adani Ports with a target price of 1,700 rupees. I feel that the performance was marginally above expectations and focuses on becoming an integrated transport utility company, and that's a big positive for Adani Ports, the integration. Also, they largely retain their estimates of FY26 and FY27. They expect the APSEZ to report a 10% growth in cargo volumes over FY25 and FY27, and this would drive a CAGR of 16% on EBITDA, 16% on PAT, and 17% in revenues over FY25 to 2027 estimates. They have performed, the performance has been led by strong growth in the container cargo segment, and logistics and the marine businesses have also gained momentum. Avendus has also come out with a note on Adani Ports, and they are maintaining a target price of 1,550. So they've hiked up the target price, and they are maintaining a buy call. And they also feel that the value of the company's stock by applying the 16x EV EBITDA to their FY27 estimate EV EBITDA augurs very well for Adani Ports. On the back of that, Adani Port is up in a way 0.8%.
Well, yes, Adani Ports in the green, but of course, let's take a small break for markets Fatafat, and after the break, we will be asking around the questions and where stocks should be following. Welcome back to Market Fatafat, and right now we are in the earnings season. Joining us is Sapnesh Lalla, CEO and ED at NIT Learning Systems. Good afternoon, Sapnesh. A mixed set of numbers coming in. Of course, the top line supporting the numbers, revenue up almost 11% on a year-on-year basis. But PAT, that has seen a downtick coming in at roughly 18 odd percent in the bottom line numbers. What may be the reason for this degrowth in the PAT numbers if I just look at the year-on-year basis?
I think the important thing to see in PAT is that we consummated transaction this past July, and owing to the transaction, we had expenses that were incurred in Q1, and those expenses, if you adjust those expenses outside of PAT, what you'll see is PAT is in line with what our expectations would be. So there were transaction-related expenses of approximately 100 million INR that could have been part of PAT if we had not done the transaction. You might recall that NIT acquired a company called MST Holding in Germany, and that transaction got consummated in July. And owing to that transaction, there were expenses that were incurred in the first quarter.
Sapnesh, speaking of this acquisition itself, this is a Germany-based MST group, and of course the transaction was consummated in the month of July. What are the incremental benefits? Which are the new areas after this acquisition which will help your company?
I think the most important one is that it gives us access to the German market. The German and more broadly the DACH market is among the largest markets in Europe, as well as the fastest growing market in Europe. It gives us a beachhead, and it gives us ability to not only add their customers to our list of MTS customers. So for example, 7 of their customers would get added to our tally of MTS customers, which would now therefore go beyond 100. But notwithstanding that, it allows us to add more services to what they are able to bring to their customers and create a growth momentum for the customers that they already have. But it also gives us capability to increase our share across the DACH region by being local, which is something that most organizations in that region prefer. But we also are able to, in addition to being local, agile, very bespoke for the organization's needs, we are also able to offer global scale and reliability. So this combination would improve our opportunities to expand in the European markets.
Well, a very interesting trend, and you did speak about your client customer additions as well. And as per the report, the revenue revisibility is roughly $388 million. Sapnesh, one more question: recycling, reskilling, and AI. These are very major topics in every organization right now, be it cost reduction or even increasing their product cycles. Just a question on this: how are you seeing this strategic focus actually panning out? And you're an industry player itself when it comes to AI reskilling as well. Which sectors are showing a lot of important demands? Which geographies are showing requests coming in? Could you just explain us the entire gamut?
Sure. First of all, I would say that AI is going to create a very different type of learning environment. It's going to fundamentally change how learning gets accomplished, and it's going to make that change happen for the better. NIT, as I've mentioned earlier, has been at the pole position in applying AI to learning. In fact, this has been acknowledged by our customers as well as a number of analysts who have shown and published that NIT is ahead and beyond most competitors in application of AI to learning. You asked about where we have seen application. Just this past quarter, we've gone live in a few enterprise scale applications of AI to learning. The early results are very, very promising. In terms of customers who are starting to adopt, most of those customers are customers who are able to take forward-looking or make forward-looking choices, technology companies, companies who are able to push the boundaries of learning. So we are seeing good adoption. It's not widely pervasive as yet, but I think we've made a move, and I think we've invested quite a bit. We've seen acknowledgement from our customers as well as analysts, and I think AI is going to be front and center for us for the next many years.
Thank you very much, Sapnesh, giving your views on the earnings and the guidance outlook ahead for NIT Learning. Best of luck for the future. But moving on to the show, Markets Fatafat, let's look at the stock. So actually we are out of time right now, and like to thank Rabinder and our guest as well, Nagraj, to actually join us in the show. And that's it from me and Ankita and from the entire team. Keep watching ET Now.